Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, editor of Woodson Wave Report, and this YouTube channel. As always, we want to get everyone caught up with our regular subscribers to our newsletter. I want to first alert you to our auto trades, and you can see right here auto trade triggers, and that's the landing page there. And I'll get into that. No, we might as well get into it now. You can see here, I'll show you the link later. The auto trades are done by Striker Securities. They're a futures broker. You can check out the daily results of all these different developers. We can scroll down, excuse me, to triggers and targets. There we are right there. That was from Friday. We have the micro E-minis and the regular E-minis. One's $5 a point, the other's $50 a point, but we can get into that here real quickly. If I can get into the most recent report to our subscribers, which was excuse me, Friday morning. Bear with me while I get that report here. Should be the, bear with me a second here. There we go. That's the November 6, 2024. That's the 3:30 a.m. Okay. That's the monthly. That's the 3:38. There, here we go. My apologies. Okay, this was our market open report for Friday, and you can see the information about the auto trade systems there. We had a lot of people asking about, we started with the micro E-minis, $150 a month, and it's $5 a point. And people wanted to risk more, I guess, or spend more. So we put in the regular E-minis due to popular demand. Okay, so there's that information there. I want to show you guys, why are we doing a video on Saturday? Haven't done one in a while. Well, here it is. We're at a Fibonacci turn date in the Fibonacci time spiral, which began from the July high. Excuse me. This spiral caught alternating highs and lows since that high, which was an all-time high at the time in July. We had a high, then a low, 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 and now we have a high followed by a high. Okay, so that broke the string of alternating highs and lows. And I think we have that on a calendar here. This is a day old. This is the S&P cash, which the spiral is based on, and you can see here that was right before this weekend. That was the market open on Friday, and the high was at that time the day before. As we know, it made a higher high on Thursday, but you can see here down arrow, up arrow, down arrow, up arrow, down arrow, up arrow, down arrow, up arrow, down arrow. We got a little bit of down there, and then another down arrow on the Fibonacci turn date. You can see our E-mini futures there. We can get into it. What we're talking about is the previous 5-wave advance started from the the 11.19 low. You can see 1, 2, 3, 4, 5 there. We had a target of 61.01. It went up to 61.07 and a quarter. So if the market, if it's going to honor this turn date, and that was old, I'll update that, then those were the retracement targets. They've changed a little bit since then, so I may just get into the monthly report there, okay? But on a higher degree of trend, or a larger degree of trend, we have a 62.71 target, okay? But we've got the upside trigger. We're long short term against the 11.4 low. We're intermediate term, we're long against the 8.5 24 low, and a longer term we're against the we're long against that low October of 23, which is over a year. Excuse me. And our triggers and targets have allowed us to stay on the right side of the market for 14 months now. But the auto trades works like this. You know, instead of potential gains, you get real gains, real losses, real stops, real profits. Okay. I am, of course, a developer. We're using our triggers and targets along with Fibonacci extensions and ratios and Elliott waves, of course. Okay. I use the Ryan Jones fixed ratio money management system. It keeps our losses to a minimum and it allows us to build upon our gains. Okay, how does it work? You open a futures account with Striker. They are a futures broker. I am not. Okay, and they will auto trade my trades. I send them to them and they make them for you in your account, which you open with them. There's their contact information. Okay, by the way, since it's here, a change in trend. We've been, since that October 23 low, we've been looking for the signals for a change in trend. We haven't seen one yet. Okay, and it's been 14 months, but we need these steps here. We need 5 down, followed by 3 up to a lower high, followed by 5 down to a lower low. Okay, that would be wave 3 in the bigger scheme of things. And any rise higher would be wave 4. That should remain below the wave 1 low. This is where it gets stuck all the time. Okay, and then after we've gone through 4, but never 5 steps, which is we need another 5 wave decline, which would be wave 5 to below the wave 3 low. Okay, and as this has been up for 14 months, unless until these steps above for a sign of change in trend are met, the larger degree trend remains up. We'll see if this Fibonacci turn date will do anything with that, but let's get you guys more up to date, and let's go to the monthly report here. And there's those the Striker daily. Every day they update this. If I don't make a trade on that day, then there won't be anything here. But it's a daily update on all these systems and their results. Okay, so let's get into the January monthly. There's the bond. Here it is here. Excuse me, I put that out earlier this morning. Again, there's the link where you can get to our daily results, contact info. Went over this already, the auto trades, how it works. Disclaimer, if you want to read that, I'm not a futures broker. Trades you make are at your own risk and all that official stuff. Okay, here's that the Fibonacci time spiral implanted in this chart, if you will, with those turn dates, alternating highs and lows. And you can see there, this is updated with the high on Friday, which was 6999.97 in the S&P 500 cash. Okay, so if you just look at these, this is obviously 1 up, 2 down, 3 up, 4 down, 5 up. If the market is just going to correct the most recent 5 wave rise from the August low of 51.19, then these are the retracement targets. Okay, 57.25, 56.09, 54.93, and 786 is 53.29. If it goes below, well, let me start this way. If it goes above 69.99, obviously we're going to higher all-time highs, and we have the higher targets at the larger degree of trend, which I think we just went over a little bit ago. If it breaks below 51.19, and it'll take some time to do that, then there's our Fibonacci time spiral. Then we're looking at, and I think I'm discussing that there, right here, a move below 51.19, correcting more than just that 5 wave advance. Okay, so we'll go to this weekly chart without all the verbiage there. I think it's easier to show in a picture. Okay, haven't done the longer term analysis in a while with you guys, so we were all over this expanding triangle. I think right after the B wave high started going down, we called looking for an expanding triangle, because well, I learned Elliott Wave on 4th waves, and so it's hard to sneak one by me. But we got that expanding triangle. Some people call this a megaphone. We have 2 different counts, one in purple, one in black. By the way, with the election and the market moving and everything, I want to point out that this is 2018 to 2020, and what we had was higher highs, lower low, higher high, lower low, and we had the current president-elect in office and all the tariffs in China and everything. So this is pretty much a roller coaster, you know, expanding triangle. So that's what we got. If you want to blame it or see a cause and effect, I'm a math guy in numbers, but you could draw that out. Okay, so that was a 4th wave on 2 different wave counts. So we got a thrust out up here. The black wave count labels that as wave 5. back in 2022 high, which looked like it was the high for a while, but we got an A down. And this is the black count, which is alternate, by the way. The purple is primary. We got an A down and then a B up. And B equals, I think it's 1.618. I have it in there somewhere, but it's right next to it. It might be that 6118. That's where 3 equals 1 on the other scale. But anyways, from here we got a 1, 2, 3, 4, 5. So it could be correcting that move up from that 3491 low on October of 22. This is the October of 23. So if it's correcting this 5 waves up from October of 22 till now, these are the retracement targets for a correction of that 5 wave advance on a weekly scale. You can see 49, 28, 46, 14, and 43, 20. Okay, so again, the purple wave count shows this as a 4, and that's purple 1 of 5, 2 of 5, and 3 equals 1 at 6118, and we're not there yet. Within wave 3 with the parentheses in purple, we have a 1, 2, 3, 4, 5. It looks like a clear-cut 5 wave advance. Okay, so that's where 5 equaled 1 at 6069, and on Friday we got a high of 6099 and some change. So that's what's going on there. This explains the purple wave count. Okay, we have a 6118 target, or the larger degree, 3 equals 1 right there. And it looks like we have 5 completed waves right on our turn date, or as close as it could get. Turn date's a Saturday. The market made the high on Friday. I'd allow for Monday to be a minus or a +1 trading day. Okay, yeah, but in this black count I failed to mention, this was 5 and this is A. It would be an expanded flat with a higher wave B and a lower wave C. Again, it's our alternate count. I guess it could play out, but we'll watch this and see. We'd have to see a decline below this wave A low to make that happen. I'm not saying it can't, but we'll see what happens. Okay, and there's the black count. We went over that. Okay, there we are again, long against the 11.4 low, and intermediate long against the August 5th low, which is up in the other chart right there, August 5th low. Okay, excuse me, that's intermediate term. And then we get into the longer term against the 10-23-23 low, and that's where we started using our triggers and targets, and that's what's kept us on the correct side, which is the long side of the market, for 14 months now. Okay, we continue to watch the smallest degree of trend for signals for a change in trend, which we haven't seen. Okay, NASDAQ. This is a daily bar of the NASDAQ. I want to point out the NASDAQ's different than the Dow and the S&P in that from its previous all-time high, the NASDAQ was in November of 21, the Dow and the S&P were in January of 22. This has a clearly defined 5 waves down, which is labeled A here. Okay, that there's no overlaps, there's no leading diagonal triangle, it's just 5 waves down. So that makes this count, which labels this B wave as a high, as a expanded flat, if you will, more likely than in the Dow and the S&P, because the Dow and the S&P had some overlap in 4 and it was a leading diagonal. Okay, but anyway, we've got a 1 up, 2 down, 3 up, 4 down, and then 5 targets here, and you can see the actual high on Friday was 19,863. There's where the B equals 1618, which I was referring to a little bit earlier. This is in the NASDAQ. It's about 100 points away, 110, 113 to be exact, and there's the 1.618 for 5, and it went above it by a bit. So we'll see how that plays out, but these patterns look like they are complete or nearly so. Okay, that's all the verbiage of that there, okay, that we just explained, but that makes it more likely that the B wave can be counted as an expanded flat, if you will. Okay, here the Dow just keeps going higher and higher and higher. Okay, so anyway, from the October 13, 2022 low, we have a 1 up, 2 down in blue. The 3 was a near perfect 1618. And then we've got 4, 5 equaled 1 at 44,550. We're about 500 points above that. And that high was on the 4th. We'll see how that plays out, but this pattern looks complete or nearly so. And if we count the individual waves there, I think I have in the verbiage that we can count that as 9 waves, which makes it impulsive, and 5 waves. Let's see if we got, yeah, we can count, excuse me, 9, excuse me, losing my voice, 9 waves up from that 8-5 low, which is here. Yeah, so that would, it'll be 5, 9, 13. Those are impulsive waves. So if it goes over 9, the next is 13. We don't expect it to go much higher from current levels. It appears complete or nearly so. The bond market, so much going on here, longer term and short term. Okay, this one here is from the low in the year 2020. Okay, so that played out to October of 22. Then we got a 2 down. Okay, just keep on this larger degree wave count here with the Roman numerals. Okay, so from 2 down we get a 3 up. So the 3 up starts as 1 of a lower degree of trend with a circle, 1 up, 2 down, lower degree trend, and then 3 up. 3 equals 1 up here at 5.367. And I think the 1.618 is at 7 something. I think I have it in the verbiage there. Okay, so we've got a 1 up and a 2 down. Okay, that was a nice retracement there. So we're starting wave 3 with a circle up, and within that wave 3, there's the 1 up. It happened November 15th at 4.505%. Now we're in 2 down. Okay, the 382 is at 4.159%. The low so far is between the 382 and the 500, and it's at 4.126. We've got to allow for a wave 2 to hit any of these targets before wave 3 with the parentheses of wave 3 with a circle begins. When it does, you'll know it, because it'll start gapping up a third of third wave. That's a third wave at 2 degrees of trend is the strongest, most powerful wave, and that'll send it above obviously the wave 1, and that may even send it above the trigger here, which is a previous wave 1 high. See that green trigger there? That's the previous high back there, and there's the target. So we got 1 with a circle, 2 down. This is where 3 equals 1. But in the meantime, we've got to allow for this second wave to play out. Okay, so very short term, we're looking for this to go down. Intermediate term, up. Longer term, up, 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 and away. Okay, because it began back in 2020, and we're just doing 1, 2. Then we get 1 of 3, 2 of 3, 3 of 3, 4, 5, and then we get 4 and 5, a much bigger degree of trend. But that's a much longer term. Okay, so here's all the verbiage on this, and you can see here the 4.159. That was the 382. We're sitting between the 382 and the 500 right there, which is 4.052. That's the next target, next target, next target. Okay. As I always say, first thing we ask ourselves, where is this wrong? Where this is wrong if the market goes below this 3.599%, because that's a 1. A 2 cannot retrace more than 100% of 1, so it can't go below the beginning of 1, which is 3.599, which was another direct hit. We were scoring. You can look at the direct hits here. There was 1 there, there was 1 there. There was a lot before that. And here was 1 here on the 4th wave down. We had a lot of direct hits up and down. So market keeps hitting our targets. I wish we had that timer digest with the bond market and the stocks, because I'm sure we'd be near the top, if not at the top, with the bonds. We've been all over this for years. Okay, so that's what we're looking at. This is the verbiage of what I was telling you guys about there. Okay, let's get into, and you can see all the triggers and targets here. Direct hit, direct hit, direct hit. We're hitting them all over the place, up and down. And gold, let's get into gold. I cut this down to the most recent third wave, if you will, 3 of 5. But we were going back, I think, to 2016 with all of our charts. But I wanted to get a little bit more micro than the big macro picture from the 2015 low. But from there, we had 1 of 5 up, 2 of 5 down, and 3 of 5 looks like it topped there. It could still go higher. I have higher targets. You'll see them in a minute. But if that is the top of 3, which happened on October 31st, here's our wave 4 targets. 2415.9, 2300.32, 2184.74. Now the wave 1 high is 2081.82, so if this is a 4, it cannot go below the high of wave 1. So we're not going to have that, that 2184 would be just above it if it did a 618. But keep in mind, this is a 4, and 4s are typically long and sideways in nature. So this could take a while to play out with a lot of up and down, sideways to downward action, price action, if you will. And I think I explained that in here. Okay, here was that upside trigger for this wave 3 of 5 here. Okay, it hit the 1, it hit the 1.618. You can see it's between the 1.618 and the 2.618. Got to really watch this. If it goes above that 27.90 without much further decline, that means that this thing's probably going to hit that 2.618 right above 3,000 for gold. But we'll be watching and updating with our newsletters for sure. Okay, trend remains up. Wave 3 of 5 sits between those. Okay, and here's those retracement levels here, 382 and 500, which are right here, 382, 500, 618. There we go over there, and that's gold. There's a reminder about the long and sideways fourth waves. Okay, short-term outlook is down to our targets. Longer term, the trend is up, because when this fourth wave is over, wave 5 up will go to new all-time highs. Okay, and here's all of our triggers and targets on that. Again, that's kept us in on the right side of the market, if you will. Okay, I want to see the let me see if I got that SPX hourly, give you guys a better look at that. Yeah, here we go with the turn dates. Okay, this is the S&P cash, and it's an hourly chart. Let me make it full screen. So this is on the shortest term, or the most recent 5-wave advance, and here are the targets here. I think I had them on that chart, but you can see this is with that Fibonacci time spiral, which started on July 16th, and it's been working, for about a half a year now. So we'll see if this holds, or if it makes a slightly higher high on Monday, as the turn date is on a Saturday. But interesting. I like the time spiral's been messing with them since the late 90s. So okay, let me get you guys out of this, and let's go back to, we could do the NQ. We'll save the NQ for later, okay? But there's all that stuff there, and that's the same thing I just showed you. And lastly, I'm going to get on that larger degree of trend, because we haven't covered it in a long time. Okay, that's going back to 2018, 2020 low, and then either 5 or 1, and either A and B with black, or 1, 2, and that's subdivided nicely. That 3 with the parentheses. Okay, so it came to 60, 69. I'd allow a 61.18, and that'd be cool if it made it on Monday, right around sandwiched around the turn date on Saturday, which is today. Happy Fibonacci turn date, everyone. That's it for this time. A little long-winded, but thanks again, and until next time, take care, everyone.